Hello guys, have you ever wondered why the crypto market seems to boom one minute and crash the next one? It's not random. The truth is, market cycles drive these wild swings. Stick around because I'm going to teach you how to spot market trends and use them to your advantage. Today we are diving into one of the most powerful concepts you can master in crypto: market cycles and trends. If you can understand how these cycles work, you'll have a huge advantage in timing your trades, making smarter decisions, and even managing your emotions during market crashes. So let's start with the basics. What are market cycles? In simple terms, a market cycle is a repeating pattern of price movements that includes four main phases. One is accumulation, the second one is uptrend, so-called also the bull market. The third one is the distribution phase, and fourth one is downtrends, also known as the bear market. These cycles repeat themselves over time, over and over again. Think of it like a cycle of optimism, followed by greed, fear, and then crash. And then it all starts again. Understanding these phases can help you predict trends and time your entries and exits more efficiently. So the first phase is accumulation. This is when the market is relatively flat and prices aren't moving much. People who are early adopters or smart money start buying up assets because they believe the price will rise later. They buy when the sentiment is low, and most people are staying away from the market. During this phase, there's usually low trading volume and a lot of uncertainties. Prices are stable but not exciting. This is the perfect time to buy if you believe in long-term potential of an asset. Then next we have the uptrend, or the bull market, so-called. This is where the magic happens. The market starts to rise and prices go up quickly. Sentiments shift from fear to excitement and everyone wants in on the action. This is when you see a lot of hype, social media buzz, and price speculations. Traders are buying aggressively and the market experiences high volatility. This is also when FOMO, so-called fear of missing out, kicks in and new investors jump in. The market feels unstoppable, but you have to be cautious because the markets don't go up forever. If you've caught the upper trend early, this is where you can make sustainable gains. But remember, greed can lead to mistakes, so don't get emotional. Always keep an eye on the overall trend to avoid buying at the top. After an uptrend, we hit the distribution phase. This is when the smart money or early investors start selling. They've made their profits and now they're ready to cash out. At this point, the market has already gone through a massive rally and the public starts to get overconfident. During this phase, the market might still go up a little bit, but there's a lot of volatility. Prices go up and down without a clear trend to see. People start to believe the market will keep going up forever, but this is where you see price manipulation and liquidity being drained. Then finally, we reach the downtrend or bear market. This is when prices start to fall and panic sets in. Investors who bought near the top start to sell off, causing price to drop even further. The cycle of fear and despair begins. During this phase, emotion-driven decisions dominate the market. Investors start to sell in panic and prices fall even faster. But remember, bear markets are part of the cycle and it's also a time to accumulate again, if you know when to buy. History shows that the market always recovers. Timing is essential. But how to spot these cycles? The key is to look for changes in sentiments, price actions, and volume. Watch for increasing volume during an uptrend, sideways action during accumulation, volatility during distribution, sharp price drops during the bear market. Understanding market cycles isn't about predicting the exact future, it's about being aware of where we are in the cycle and use that information to make smart decisions. So with that knowledge, what phase do you think the market is in right now? Accumulation, bull market, distribution, or already bear market? Drop your thoughts in the comment below and let's discuss it. If you enjoyed this video, make sure you hit the like button, subscribe for more insights into the crypto trends, and click that bell to get notified whenever I post new content. Also, don't forget to check out my other videos to learn more about the crypto space. Thanks for watching, and remember, understanding market cycles is key to successful trading. Stay informed, stay patient, and happy trading. See you in the next video.